What's up everyone, it's your boy Looney back with another video. Today I want to break down something that a lot of traders or new traders don't expect, and it's early assignment on a options trade. And I actually just got assigned early on my Riot $10 sell put, and I want to explain what happened and why in my scenario it isn't a bad situation and how I actually was able to benefit from this situation. Before we get into it, quick shout out to my Discord community, free to join. And then if you want real-time trade alerts, premium strategies, and exclusive plays, there is a premium version, $8 a month, and you can check it out. All links will be in the description, but let's break this down. So what happened? I'm gonna pull up Riot right now, and I'm gonna try my best to find the trade. But I had a $10 cash secured put on Riot set to expire March 21st. So let me actually find that one right now as we are looking. Yeah, right here you can see sell Riot $10 put expiring 3/21. Let's just break it down first. So I got the $43 premium, and I opened this trade on the 18th of February, and Riot was trading a little bit above $10 at the time. Riot and other crypto and honestly the whole market has dropped back, and I was in the face of assignment, and that's what happened. So we fast forward to a couple days ago, because today is Friday. We go up to here on the 18th of March, I got assigned. So it says Riot $10 put 3/21, but I got assigned on the 18th. And right now Riot is trading at $8, which means it made sense for the option holder to exercise it early and sell me the shares at $10. Because there's buyers and sellers for option plays. And I was selling an option, and it made sense for a buyer to give it to me at $10 a share, or sell me the shares at $10 a share. Now, this caught me off guard at first, but honestly, looking at it now, it wasn't a bad thing, and here's why. One is I got to keep my premium. If you guys don't know, you get what's called a premium upfront, which I just showed you, that $43. And whether you get assigned early or at expiration, that premium is yours to keep. It goes into your buying power. And in this case, I got paid I got paid for the premium regardless of the assignment. So I got my premium and I got assigned. Number two is it was cash secured. There was no margin issues. So when you guys do Robinhood or most platforms, they make sure you have the cash to put up. So since it was cash secured, I already had money set aside to buy 100 shares at $100 or $10. So when I got assigned early, there wasn't a panic, just a shift in my strategy. And number three, and this is the most key reason why I actually benefited, or I was able to make light of this tough situation, because Riot did pull back, and it's not good to see that because I actually own the shares now. But I was able to sell covered calls earlier. So instead of waiting until next Monday, because if you guys don't know, most options expire on Fridays, and then they don't actually go into effect until the weekend, and then you have to wait till Monday to do another trade to sell a covered call. So if I got assigned a cash secured put on Friday, I have to wait till Monday to sell a covered call. And if you guys also don't know, time is money, especially when you sell options. Day to decay is a thing, so you want to have as much time as possible when doing option tradings. So instead of waiting until next Monday, I actually was able to immediately sell a covered call at a strike price of, let's see what I actually sold. I think it was 8.5. Let me just quickly look at it here. Yeah, I was able to sell a covered call at 8.5 for next Friday, and I got to collect that premium. So that premium is also pretty good because I got extra days. So I got extra days of premium collection, making the trade even more profitable. So if I open the trade on Monday of next week, it probably wouldn't be $14. It'd probably be a lot less. And because I was able to do it a couple days ago, I got it for 14. So obviously I didn't make a lot of money from this trade, the $14, but I could have went out further on the expiration. And I'm also doing a lot of different plays on Riot. So every little bit counts, or it does go a long way. Now, why does early assignment happen? And I kind of went over this very briefly, but early assignment can happen for a few reasons. But in this case, intrinsic value, the put option had intrinsic value because Riot was at $8, which it is right now, meaning it made sense for the holder to assign it early and sell me the shares at $10 because of how much Riot dropped. They decided to sell the shares because Riot was dropping and it continued to drop. And yeah. Number two is the low time value left. So since the option was expiring soon, the holder likely saw no reason to hold it longer and risk losing more value. Lastly, and it's not in this scenario, but there is dividend considerations. For other stocks, early assignment can happen around dividend dates when traders want to capture the dividend. They want to capture the most dividends with owning the shares. And that was in this scenario, but it could be for other ones. Now, my takeaway and my strategy moving forward hasn't really changed. I'm going to keep doing what I do, which is the wheel strategy, sell premiums. And I'm not really mad about getting assigned early. I actually do see it as somewhat of a strategic advantage. I still collected my premium from the put, even though I didn't have to hold it for the full amount of time. Because if you guys don't know, when I sold that put for either a couple weeks or 1 week, I have to wait to get my cash back. And I get paid, obviously, that premium, but because I got assigned early, I got my money back sooner, or it turned into shares. And now I own Riot at $10, which I was willing to do anyways. I feel Riot at $10 is what it's valued at. And now that it's under $10, I might sell more cash secured puts. Someone else actually asked in my comments, why would you sell puts if the stock keeps dropping? Or why is it considered that you get it for cheaper if the stock keeps dropping? And you could actually dollar cost average on cash secured puts. So I might be able to sell puts at a lot cheaper now. It's $6, $7. We'll see. I'm just waiting for my credit spreads to get closer to expiration because these honestly were mistakes on my end, but we'll see where that lands. And overall, I'm okay with owning Riot at $10. Obviously, I'd rather own Riot for cheaper, but it's fine. And I immediately started selling covered calls for more premium. So I got assigned on that Wednesday, and that Wednesday I sell the covered call. So I got that extra premium, that extra probably $4, $5, if we're being honest. And Riot right now is trading at $8. And I actually am going very safe on my trades right now because there's a chance for quantitative easing, there's a chance for crypto to go back up, interest rates to be lowered, inflation to drop. So I'm trying to be very cautious and setting my strike prices very high or my deltas very low. And that's why this premium wasn't that big. It was very small because I am selling deep out of the money. But if Riot does trade well of 8.5, I'll have to roll it because I want to keep these shares until it's over my cost basis. And that's also fine. I'm playing this long game. My final thoughts is if you are trading options, always be prepared for early assignment, especially on deep in the money contracts. But as long as you're trading cash secured puts properly, it's not a bad thing. In fact, it can actually give you an edge in this scenario. Let me know in the comments, have you ever been assigned early? How did you handle it? Don't forget to like, subscribe, and join my Discord for real-time trade alerts and market decisions. Until next time, peace.